Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. The ISE CTA Cloud Computing Index, ticker CPQ, is designed to track the performance of companies actively involved in the cloud computing space. That certainly has gotten a lot of attention in the work-from-home environment. And joining me to discuss the index's performance and fundamentals is Mark Marex, Product Development Specialist with Nasdaq's Index Research Team. Mark, it's great to have you with us. Welcome back to Trade Talks.
Great to be here. Thanks for having me, Jill.
All right, Mark, let's review how CPQ performed relative to other major benchmarks.
Sure. So as we look at year-to-date performance here, we can see it's actually leading NDX, which is the Nasdaq 100, which gets sort of all the hype this year for being by far the best performing large cap index. Obviously very heavy in tech. CPQ is sort of one of the growing thematic tech indexes that we have here at Nasdaq. It's got a couple cool products tracking it in the US and London that have seen really nice growth in AUM, and a big function of that is returns. As you can see, pretty much all year it's been leading, even prior to the downturn in March, and especially since the recovery has been keeping pace with the Nasdaq 100 or even outperforming a little bit.
All right, and let's take a look at our next couple of slides here. One showing index fundamentals, and then we can even drill it down more into constituents performance.
Yeah, so we did some research on this index recently. It's about to get published, and one of the things we're trying to understand in explaining this index to folks is obviously performance has been very good the last couple years. It's a high growth area. What's driving it, right? Is it truly future expectations for profits that have yet to materialize? Is it growing revenues? Is it dividends, or is it purely kind of more of a factor momentum play? This kind of shows you, looking at the top 25 constituents in the index, which is the bulk of the weight. The gross margins among these constituents are very healthy, right? Most of them are in the 50, 60, 70, even 80% range for full year 2019. We don't have those numbers really yet for 2020 yet, because we've only had about one quarter of reporting. We're getting the second quarter underway in terms of reporting right now. But, if you look at Microsoft, for example, reported last week, I think the gross margins went down a whole 2% year over year, whereas their cloud growth, was up 50% sequentially, which is just extraordinary. Where you think about, when you think about the revenue challenges that other firms are facing, obviously Microsoft does things but beyond cloud, but it is also the #2 cloud provider in the world. Still just crushing it in terms of both revenue growth and keeping those margins super solid. So that's a very strong fundamental story, we think, for the index.
So if we take a look at some of the constituents in the next chart here, what are some of the other companies that comprise the index?
Yeah, so you've got, kind of a mix of firms like Microsoft, where, cloud is just one big component of their business, which is kind of diversified tech in different areas. Amazon, Oracle, Google, they all fit into, even Cisco kind of fit into that, that sphere of diversified tech, but have obviously a very heavy cloud component. Then you've got sort of your more specialized, really high growth players like Fastly, ticker FSLY. What can you say about Fastly? It's more than tripled in price so far this year. So we'll see how its earnings go later in this quarter. But Fastly and Shopify are two of the real standouts in terms of performance. You've also got Adobe, you've also got Akamai, Alibaba, a bit of international exposure there. So really kind of a good mix of companies that are, either specializing in cloud services or cloud infrastructure, as well as, some of your bigger diversified tech names that are, going to get high weightings in this index as well.
So Mark, to wrap up here, is there an index that tracks the index to make it more accessible to a broader group of investors?
Yeah, so First Trust has an ETF out in the US, ticker SKY, with 2 I's at the end of it. And then there is also a London listed UCITS product that was launched within the last year, I think within the last 6 months even. So this kind of shows you, the path of the AUM growth over the last couple of years. Sky was at just around $1 billion. When you go back 3 years in the calendar, it's at about $4.5 billion today. So really, really extraordinary growth. Obviously, some of that has been price appreciation in the constituents themselves, but a lot of good, healthy inflows as well. And then again, the Europe product listed in London, I think it's up to about 350 million in AUM these days. So combined, getting close to that 5 billion threshold.
All right, Mark, great stuff as always. Thanks so much for joining me on Trade Talks.
Thank you so much.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.